Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Monday, January 5th, 2026, and Wall Street just showed how fast it can change its mind. The U.S. capture of Venezuela's President Maduro grabbed the headlines at first, but traders ultimately faded that story. The real pivot was a weak ISM manufacturing print, pointing to the sharpest factory contraction since 2024. That pulled the 10-year yield down toward 4.17% and kept the Dow in the lead, while the Nasdaq traded much flatter. Risk wasn't off the table, but it was a lot more selective. Building on that, the S&P 500 Heatmap told a fractured story. You didn't see a wall of green. You saw pockets. Defense names stayed solidly green, and some semiconductors held their outperformance. But energy, which opened strong on those early Venezuela takes, faded hard by the close. Software looked tired, and media had its own pain points. The picture was of a market that's still willing to own risk, but only in very specific corners. So what does that mixed heatmap actually mean? It reflects a tug-of-war between fresh growth worries and an underlying desire to stay invested. The ISM miss puts manufacturing back on the worry list, but falling yields give valuations some breathing room. Instead of a broad sell-off, we saw narrow leadership, fast intraday rotations, and traders leaning into themes they still trust. The ongoing bid in things like silver and even Bitcoin suggests the risk switch is still on, just not across the whole board. On the rumor side, desks spent the day arguing about the so-called Venezuela trade. Early on, the chatter framed it as a rebuilding boom for oil services and producers. By the afternoon, that same story flipped into talk of future supply gluts and over-optimism in the morning rally. None of this is backed by new hard data yet. It's positioning talk, sentiment talk, and it showed up as a fast U-turn in a lot of energy names. Let's start stock-specific with Occidental. Oxy went from early beneficiary to late-day laggard. After an upbeat open tied to that rebuilding Venezuela idea, the stock finished down roughly 4%, one of the standouts on the downside. As the narrative shifted toward potential supply overhang and softer growth, the bid just didn't hold. Oxy's move was a clean reminder that this energy rotation is fragile and that headline-driven rallies can unwind quickly when the macro story feels shaky. Devon told a very similar story. DVN started the day benefiting from the same hopeful read-through on Venezuela. By the close, it was down around 4%, matching the pressure across the more leveraged producers. There wasn't a new company-specific headline here. It was a positioning swing, early optimism, then a rethink as growth concerns and supply questions crept in. DVN basically became another textbook case of how fast energy beta can turn when the macro tone changes intraday. On the other side of the tape, Lockheed Martin was a quiet winner. LMT caught a sustained bid as the Venezuela operation kept defense spending and geopolitical tension in focus. Unlike the whipsaw in energy, Lockheed's gains held into the close. There's no flashy new contract here in the headlines, just steady interest in defense exposure on a day when intervention is front and center. LMT continues to act like a go-to way to stay invested while acknowledging a more unstable backdrop. Micron is another name that stood out. MU stayed on the right side of the tape as semiconductors continued to decouple from broader software weakness. While parts of the software complex looked heavy, Micron and a few memory and storage peers kept grinding higher. In a session defined by growth worries and falling yields, that divergence is notable. It suggests investors are still willing to back select hardware exposure, even as they get more skeptical on pricier, slower-growing software names. Comcast was one of the clearest single-name drags. CMCSA slid about 6% following its finalized media spin-off. The move suggests investors are still digesting the structure and implications of that separation. There's no broader market read-through here so far, but within communications and media, Comcast's performance stood out on the heatmap. For now, the spin looks like a short-term overhang for the stock as the market reprices the new structure. Silver deserves a mention here as well. While growth fears picked up and energy rolled over, silver stayed firm, adding to a recent run that's already drawn in tactical traders. It's functioning as both a safe haven and a speculative vehicle, similar in spirit to what we're seeing in Bitcoin. That combination is important. Even on a day with weak manufacturing data, investors are still comfortable owning high beta, high volatility assets alongside their hedges. The The risk switch, structurally, remains on. Looking ahead to tomorrow, the ISM surprise is now the frame for the week. The big question is whether today's weaker factory print marks a blip or the start of a broader slowdown narrative. Lower long yields help valuation math, but they also complicate the story for banks and cyclicals. Energy and defense just had very different days off the same geopolitical headline. So how those groups trade from here will be an important tell. Above all, watch the breadth. Does leadership stay this narrow, or does participation widen out again? For near-term positioning, a few names sit right on the fault lines we've been talking about. Oxy and DVN will tell you whether today's energy reversal has more room to run or starts to stabilize. LMT and NOC remain live gauges of how aggressively investors want defense exposure as geopolitical stories evolve. Micron and other semis will be watched for confirmation or rejection of this decoupling from weaker software. And CMCSA trades through the messy early stages of its spin-off, giving a clean read on how patient investors are with legacy media. To wrap it up, Monday showed a market that can absorb a geopolitical shock and then move on just as quickly. The Venezuela story mattered, but the ISM miss ultimately set the tone, reopening questions around the strength of the recovery. Even so, defense, select chips and silver proved there's still plenty of risk appetite out there. From here, it's about confirmation. Do the next data points back up today's growth worries or calm them down? That answer will help decide who really leads this market into the rest of January. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.